Good evening, traders. Welcome to my channel Stock Index Edge. I'm Nalnakshi Swami here. Coming up with the expiry day trade. What happened to the Nifty? I want to analyze this. Actually, in the morning itself, it started selling off. You can see a single candle, 15 minutes candle, huge sell-off in the first 15 minutes candle. And the price action contained within the 15 minutes range. That was 15 minutes range was 85 points. So the trade was in between the 85 points range only. Such a narrow range. So there will be an expansion on Friday or in coming days. Even if the Friday stays in a narrow range, there will be an expansion either to the upside or to the downside. How you could have traded this? See, usually this I've discussed about the quarterly cycles, 90 periods, 90 minute cycle, one quarter. It has been divided into 6 hours, has been divided into 4 quarters. So 90 minute cycle. Within the 90 minute cycle, first 15 minutes, you can see a huge candle. So this was exactly to the previous day low, 20,852. It made a low of 20,851.35, just little bit lower than that. And next candle made a low of 20,850.80. So in this candle, when it is reversing, I knew somehow I was able to make out that the price is going to reverse. Actually, by around 9:50, 9:30, 9:45, and 9:10 and 10:50. That is 1 hour is over. In the 1 hour time frame, it was near the lower range, but could not fall below the low made on the first 30 minutes. So what you can do is, another hack I found out is, you can go to one website that is called as tradingtick.com. This is tradingtick.com. Here, if you go to the replay button, and so if you start moving this from here to the back, around 9, so I need only 20,900 call option and 20,850 put option, or 20,800 put option. Let me remove all these things and let me have this. So this is the call option, 20,900 call option. Here around 9:40, note down the time. And it started crossing below the 20,800 put. That means it started making open interest, started falling down in the call option. Till that time, open interest was rising. You can see slowly it started coming down. 1259, 12,593, and then it came down to 13,582 and 13,000. Put option started increasing at that time, 9:40. 9:40, it started moving. Okay. There, later, if I move the cursor, 20,900 call option, open interest started building. That means the market is going to turn around. around 9:45 exactly here. You can see 9:45 candle, 10 a.m. candle, and 10:15 the market started reversing. Let me go to the call option, option premium. What happened to the option premium? It fell down to the level of, let me take out, around 9:15, 9:25. It was at the level of low of 75.45 and it bounced up to 170. And then later it started coming down. It made a low of around 59 rupees. And usually I mark the levels to note the levels on the option premium so that I will have guidance. So the low made on the what day? On the 5th was 60.2. So, and this candle, and also on the trading tick, it was showing that there was unwinding of call options. That means open interest unwinding. That indicated reversal of the. So you have to think of the market reversing from the fall. So you have to go for the call option. So I was confident that, and so I entered around 77 or 75, I believe, 75 points early, but I could not guess this much fall only. But I was confident that it is going to come up, and I entered that, and I was able to capture this much point, 130. It moved from 75 to 130. I closed around 130. I was able to capture that moment. So in that way, trading tick here, by seeing the unwinding of the call options and the put option increase in the open interest in the change in open interest in the put option rising indicated the support around that area, and also you can anticipate a reversal. So later I did not trade about that, but it stayed within the range, and it clearly suggested in the tradingtick.com 19,500 as the call option. There was huge writing on the 19,000, 20,950 call option. So it was sure that market in Nifty is not going to go above that. It ended within that range. And even the quarterly cycles and also the alligator indicator helps you to take the trade. For example, in here, if I go to 1 minute chart, here you can see clearly there was actually reversal on the alligator, and it's aligned itself to the lip, teeth, and jaw. So there was a huge move upside, and even the correction, even to this correction around 88, if you would have entered, you would have made money till that. Why it started reversing? Let me go to this is the time, 11 o'clock. Let us check on the tradingtick.com on 11 p.m. What happened? I'm going to show it to you. 11. Actually, if you see the 20,850, I need call option. 20,900 call option. See, 1047, you can see clearly the call option. This is 20,900 call option started coming down. So why? Because there was increase actually. And these put options started moving up. In this way, you can cross check with this trending OI. This is actually in tradingtick.com. If you click on the options, this one, trending strikes, if you click, and if you start placing the cursor on the call option and put option, you will come to know which side you have to, where the reversal will take place by seeing the change in open interest, either in the call option or in the put option, will indicate you whether to take on the reversal trade. In this way, you can take, and also Alligator helps you to take trade. See, you can see the, since morning it was falling. Actually, you can see the huge fall and a push up to around 938 is pushed up to 101, and later it started falling till 1020. 1020, you can see the coming to the low of the 59. And see, you will be scared actually. You will be scared whether to take the trade. But around 1020 itself, 1040, you can see 1020, there was a reversal in that, and the call option made a low of 59, and this was a huge run from here 59 to 130 is 112% gain. That is 68 rupees. So you cannot capture the whole lot of it, but at least you can take the trade by cross-checking with that and seeing the reversal, trading time, quarterly cycles, and also Alligator. Let us check on the 1 minute time frame. Alligator here also on the, so let me hide the quarterly cycle so that you can see clearly. Here you can see clearly the market started trending. After the convergence, it started trending over here. Around 1021, it made a low of 10,000. 20,859, even though this low was higher than this low, but the option premium decayed more than that because of the volatility, gamma effect. So it corrected, even though there was a correction of around 41 points. For the 41 points of correction, you got correction up to, from here to here, 55 points. That was more actually, excess more than 100% is correction. So definitely you will get panicked unless you know the levels and the calculations. You need to do calculations before itself and the levels to work out with. That's how, by cross-checking with all the things, you can succeed. Even the Alligator will help you to take the trade. See, till now, see, even though it reversed here, made a reverse, there was no reversal on the moving averages. Only here crossover happened, and the alignment of the lip, teeth, and jaw came in the Alligator indicator. In this way, you can take trade and make profits. Now, what happened to the Nifty? Probably that's what I'm feeling. Let me reset the chart. But actually, it has made a double bottom, equal lows it has made. So when it has made equal low, maybe there is, so liquidity hunt may take place and Nifty may come down to 20,821. If I go to the hourly chart, if I enable the quarterly cycles, you will get this level, 20,821. So if it comes down, dips down to this, and it may start reversing also. So immediate level to note down, for the tomorrow's trade is 20,821. And also you try to notice in what period what it is happening. So yesterday itself it started showing that, let me go to 15 minutes. Yesterday itself in the first quarter itself, it started and it was in a range. So it traded in a range and the manipulation phase, that is around 12 to 1:30, they manipulated and the finally market was closed at the expansion phase and closed at the high. And today it came down. It was a reversal downside exactly to that level and later it stayed in a range. So it made a double bottom, equal low. So there is an liquidity below this level. Liquidity because buy stop losses will be there. So sell stop losses will be there around this. So if it goes below that, so many people will have this stop loss and they might have gone long in the next contract. In tomorrow, suppose if it dips to this level, it can grab the liquidity. If it grabs the liquidity here, the market grabs the liquidity here in this area, and if it starts moving, reversing, it has got the capacity to go past 20,990 or 21,000. So it has got the ability to go to the level of 21,000 and more. So like this, and they will grab the liquidity on the double top over here. So both the sides on the top, at the bottom, there is liquidity. They can grab the liquidity down and it may go up, or either they can do like this. They may grab the liquidity towards the upside and then it may plummet. It can reverse like this. So path may be different. The trading, only morning opening and how it trades tells us in which direction market is going to trap the liquidity. If it traps the liquidity on the higher side, its intention is to go down. If it traps the liquidity on the lower side in the initial hours, probably its intention is to go higher, slowly higher to it may close around the top of this. Okay, friends, this is how you can trade your intraday wisely by noting down the levels and anticipating the levels and marking down your levels. You can trade wisely. Thank you very much. Nalinakshi Swami signing.